have more of the same from yesterday. A little bit more US dollar weakness than I suspected into the FOMC minutes. I thought that they would offer a little reprieve, and you definitely had that sense going into some of the start of Europe there in Asia. But you know, we did make fresh highs, took out those the last level of resistance in the euro that was much vaunted and talked about here. I got suckered in. I bought the break. I probably shouldn't have done that. We've had a nice reversal here since you know, taking out that 180.30 level. I think I bought it like at 35. A little bit of a mistake there. If the market gets underneath 118, I might just close it just to step to the sideline for a second. So in terms of my positions that we got going on here, just didn't get the take profit here. I don't know about that take profit, where I put it there. In hindsight, maybe I should have just put it at 30 and just taken it and then look to reevaluate. I suppose I was getting a little greedy. You know, it's actually better to have no take profit here than to have a take profit in the middle of nowhere. You know, what I was expecting the market to take stops and just keep going one way without pullbacks, or can always adjust and re-enter. Even if, you know, if this didn't get triggered, it's just not a good spot to put the take profit. I think I was looking at the previous supports as now the resistance, rather than looking at the previous high, which is what you should do, right? You should always try and take profit here-ish, and then look to see what the price action is after the takeout of the previous high. Sometimes you do get these reversals. If you don't get the reversal, you can look to re-establish on a dip pretty quickly if it breaks cleanly high. So that was just a straight up mistake in terms of take profit placement. So what I'll do is I'll just close out the euro trade. It's not like I don't like the euro trade, it's just I want to see what happens next and give some respect to the US minutes, which if you remember, the meeting was quite hawkish event for the US dollar. So the reinforcement of the Fed raising rates might indulge the US dollar bulls for a day or two. And you know, do have that CPI coming up on Friday, which is supposed to be bumper. Very hard to sell into that if that's going to be the number. If it's going to be 0.6%, 0 month on month, that's just going to get the inflation talk, you know, a fever pitch after the wage inflation last Friday. So it's you know, it's probably better to be playing long euro yen rather than long euro dollar just for the short term, on the expectations that dollar yen can catch a bid. Dollar yen did catch a bid in the middle of Asian session, but has given back all those gains quite quickly. So it got all the way back up to 112.60 and then faded. And we did test 112 last night. You know, suspected that that might have been the bottom, but it looks like we are having another run down. Some North Korea headlines in the last hour or 2 hours have put emphasis back on that fear. But you know, the talk is not that negative, right? They're talking about short-range missiles, multiple short-range missiles. That's not as scary as an ICBM test, which is what would force maybe a bigger response from America. This is just more of the same from North Korea. This is actually low intensity, saber rattling, in my opinion, rather than high intensity, and would just provide a great buy on the dip for dollar yen, euro yen, pound yen if that was to cause any significant selling. It doesn't seem to be the case that you will get you know, a significant reversal on that sort of news. You know, the smallest of all North Korea saber rattles shouldn't be the thing which breaks the camel's back. So the FOMC minutes is more likely than not to be US dollar positive. You know, traders have been asking if it's a big event. Probably not a big event, but it does focus the traders' minds on US yields and the Fed, and there could be some interesting tidbits in there. You know, I doubt you can take away too much bearishness from it, dovishness. The inflation debate, though, is very interesting. That was going on inside the FOMC. There's some who think it's you know, so low that it can delay rate hikes. There's some who think it's a temporary issue and that you're going to see inflation come back. That way, you know, just seeing the intensity of the debates makes it probably even more important what that inflation number is on Friday. You know, if it looks like that's the thing holding back, you know, some members, or it looks like it's taking a greater role of importance on, with some members, then a strong number really opens the door for rate hikes next year, and that's where you get the sustained US dollar rally from. That's where you get the bigger moves from. That's where you get the dollar yen breaking the 113. If that was to be the case. Now, the stock market reaction to Fed raising rates faster than expected will be interesting. Historically, that sort of news would be negative, but we haven't seen it play out like that for a while. And so, if the stocks remain just relentless as they are, then it's probably just onwards and upwards for dollar yen in a very clean fashion, if that was to be the case tomorrow. So, I think net the US dollar is fairly well priced here. You've had the overextension, and you've had the pullback, and now you've got the burden of proof on the Euro bulls to take up the mantle. So that's why Euro yen to me seems like the natural way to play here. You get the dollar yen rally playing through on Euro yen, and you get any sort of next level of US dollar weakness play through via the Euro USD, and it's not like the dollar yen is going to fall through the floor without some change. Something changes, then we change. So the change would be North Korea, the change would be stock market, or Japanese elections becoming a thing. So far, they're not really a thing, right? They're just, they're probably, most likely, Abe's going to win, right? If that changes though, yeah, we have to be a little scared. A pullback to 110 is on the cards if Abe doesn't win, or loses a huge amount of support. Let's have a little look here at what else is happening. Aussie dollar failed above 78, nothing really going on there. Kiwi dollar, it was a little bit more weak than others. The ongoing uncertainty is continuing to weigh on the pair, so it failed pretty quickly as well with its nascent rally. I still suspect that we will have a relief rally sooner rather than later on the Kiwi dollar. We just need to get that clarification. That clarification should be coming tomorrow. Alright, so that tomorrow could be a really big day for the Kiwi dollar, one way or the other. I'm happy if Nationals win. I'll be buying the Kiwi against something. And if the Labour wins, I'll watch the price action, see how far we fall, and then look for some stabilization before buying. So that's the other option. I doubt we will fall off. Clear. I don't think we'll get below 68 if Labour wins, but you might get 69ish quite quickly. So that puts the Aussie Kiwi in a bit of a funny place here. Very strong technical trade, but you have to worry about what's going to happen in the next 24 hours. This is not as clean as it was. We talked about this yesterday. This is not a very clean fundamental trade, or just a 24-hour news cycle trade. Right, coming up right now is going to be very dangerous for this Kiwi, for any pair, no matter what it looks like on the crosses, because the movement in the major should be dramatic one way or the other, and that's where you're going to get a little bit of maybe new direction here. So it's stalling here at the 110. It does look like it wants to go higher. Very much the charts look like it wants to go higher. And the long-term fundamentals does support it going higher. So there's reasons to be really in this trade long, but you might get a much better level if the Kiwi dollar has a multi-day recovery. The final commodity currency, CAD, dollar CAD, where are you? It's oil. Is respecting its upward trend line, right? The trend line's been holding now for so long. And so the buying of the dips is pretty much. I mean, it makes it really hard here to be bearish. I know that we had such a huge run, but we really need to see some breakdown, and then we can start talking about selling dollar CAD on rallies. With the other two pairs, the Aussie and the Kiwi, not involved. It is sort of, that's affecting the relationship for the dollar CAD as well, because dollar CAD is a commodity currency. Computers and algos, trade the three together a fair bit, and if you lump them all in as underperforming, that means certain pairs like let's just bring up, Euro Aussie, nice uptrend, Euro Kiwi. these are very similar charts, just different intensity. And so that sort of grouping together of the commodity currencies does make it hard for the dollar CAD to break out and do its own thing. Once it's gone back to being part of the group, right? After it's huge, over its huge rally, which it did solo. A fair bit of that rally was solo. But now that it's more evenly priced, then it goes back to just the normal sort of movement. So you shouldn't expect it to be able to, unless there's something changes from the Bank of Canada again, into opening their door to rate hikes again this year, then you shouldn't expect the dollar CAD to fall off a cliff. But if you can get some dollar CAD, sustained US dollar weakness and the euro going back towards 120, then the dollar CAD should fall back down lower, right? Just in sympathy. Just we need to, let's see if we can break 124.50, and then we can start talking. But other than that, topside, I'm not really keen to buy here either, right? Buying here is similar to selling Aussie. Like, it's just it's not a very high probability trade. It would be nice technically if we broke down on the Aussie. It would be nice if we broke above 126 on the dollar CAD, but it's you require faith in this recent US dollar trend to continue, and that's the part which is very much up in the air, given the rebounds in the euro and the pound, which are much bigger important players, and the follow through on the falling in sympathy with dollar yen. So if we're going to get bullish on dollar CAD or bearish on Aussie, I think tonight's a very important test for the US dollar. Today's price action is probably critical actually to how we develop. If the US dollar can gain for a day or two, that will make me have to rethink, and probably a lot of traders have to rethink whether the US dollars or whether the euro is going to get to 120 as quickly as we thought. Therefore, whether the pound and the other pair is going to be as strong against the US dollar. And somehow if the dollar yen can get above 113, that opens the door as well for the US dollar strength to continue. But the burden of proof is on the US dollar now as well. So it's an important day for the US dollar. We watch it tomorrow. It's going to be an interesting update where we are at. If we're talking about the euro back towards 117.50, we talked about this, right? We don't want to buy the euro the next dip. If it falls sharply, it's actually not a good thing. It's not a good thing, yeah. And it's not what you want to see as a trader. If we get back towards 117 again, probably we're going lower, in my opinion. But yeah, there's a fair few moving parts here. It's not just a straight up US dollar story, but it seems to be anyway. The most important thing is what happens with the US dollar in the next 24 hours for how we play most of the pairs. There's nothing else on the financial calendar, that's for sure. So we just have to sit here as traders and pretty much watch that price action, and then decide on the new course. If you make gains in the market and it becomes a little choppy, and then you're coming up to key resistance points, there's nothing wrong with not having trades open. It's not like you're not trading, it's just you're waiting. Yeah, Shay baby, I think I just answered that. It's very important, but only because there's no other data and where the US dollar is. That's the importance of it. So if the US dollar is going to resume its rally, it should do it today. Yeah. Any more weakness is going to do too much damage technically to it. And really we could be anywhere tomorrow. And sort of what happens today is pretty important for how we continue to play. You can imagine we're sitting at a poker table, right? And you think a guy's bluffing, and you've got to the turn, right? So we're not on the final card, and he bets. You check, he bets, and you raise him, right? And that's where we're at. So we think we know what's happening. Euro's going to 120. and it's up to the other better, and the other bet is US dollar in this cards. Now, if he comes back over the top of us, and tomorrow we're at 117.50 and dollar yen's testing 113, market's all talking about inflation. What do? All of a sudden he's not bluffing. US dollar's got strength, and you either need to call or fold, right? That's you. You're not going to re-raise, right? It's so that's the way I'd put it. We're at an interesting turn card, and we're now checking if the US dollar can handle this. And that's the way I'd be framing it in my mind. It's pretty much up for grabs what's about to happen, and we shouldn't be too dogmatic in our views. Have your opinion, but let that price action guide your decision making much more than your personal beliefs on what could happen or what should happen. Because even if the euro is going to 120, it might go to 116 first. Yeah, that is definitely a real possibility. Let's have a look at some of the bank research out on the FOMC. Just got a little gleam of I do be putting out a lot of nice little trader friendly research these days. So the dot plots were unchanged, meaning that the policymakers weren't really too worried about inflation. But how deep was the discussion is what we want to see what's going to be in the cards today. So they expect inflation to gradually pick up over the next few months. If that's a big part of the debate about why they left their dot points unchanged, that makes Friday's CPI number literally huge. So they see the debt ceiling deadline being a bigger threat to the rate hike than inflation, which is something we haven't really seen in the news lately, is it? That debt ceiling, after it was kicked down, the can was kicked down the road for another 3 months. But it will become a story in late November, early December, that's for sure. All right, euro's been grinding high all week. We've come a fairly long way. So he wants to start getting short with stop above 118.70. Okay. Looking for the hawkish tone and strong data to help the US dollar. Expecting, this is UBS by the way, expecting range trading, playing long side 112. For euro yen to test 133. This is nice. This reinforces leaving the euro yen open for tonight. That's the trade I'm a bit more comfortable with. Seems to be getting nice support on dips in the last couple of days. Starting to build up again. A little bit of a false break here though, but mainly driven by the euro reversal than anything else. And dollar yen's got so much room to move that rally in the euro, that just opens up. If dollar yen gets to 113 again, we're back well above 133. It's got to be flexible. Going to reevaluate tomorrow. Pretty much how we've talked about so far. Aussie dollar. Looking to sell rallies. Yeah, I mean, it's really, you're really like, it's hard to have conviction in the Aussie at these levels. This is not 80 cents. If you're bearish, you could get easily much better levels to sell than 78. I think you're stretching for a trade if you're looking just to sell into this window, thinking everything's hunky-dory. If you're selling into this window, it means the US dollar's weak, the euro's on the move higher, and you want the Aussie to reverse by itself. Right, so Aussies are not going to get to here very easily at all. But such traction will require help from the rallying euro, blah blah blah. Okay. Yeah, so you want basically the US dollar to get stronger against the Aussie only, or the Aussie to I don't know, why would yeah, no. Like if you're going to play short Aussie, you play Euro Aussie long on dips. Is the way to play it. You don't want to rely on US dollar strength or weakness as that's the main driver of the Aussie dollar right now against the US, Aussie US, you know, this US dollar. But the Euro Aussie, the main driver is Euro strength or weakness, and you can bank on some more Euro strength at some point, regardless of the US dollar. Kiwi, blah blah blah. If the Kiwi does rally after Nationals get, you know, form government tomorrow, don't sell into that. Don't sell into the 71.30. Just don't sell at all. Kiwi is notorious for overshooting. So, you know, literally I wouldn't sell until we got to 73 on the Kiwi. If it was starting a rally. It is a widow maker. It is the hardest bet to trade, and you don't want to pick its top, that's for sure, if it starts to change direction. Alright, so we'll finish up with one more ING daily FX strategy. NAFTA being reviewed makes the Mexican peso and the Canadian dollar shaky. Doesn't make the US dollar shaky. I mean, it doesn't help the US dollar, you know, probably against other things if it becomes a big deal, but yeah. What helps the euro long? Yeah, they're talking about the NAFTA here. And the president's reportedly set to unveil NAFTA proposals that will throw the whole deal into peril. That sounds like another day in the office for Trump, right? Yeah, what are we burning down today? He definitely doesn't mind a bit of controversy. The window of opportunity for ECB-led rally may now be open after the suspension of the Catalan referendum result. The euro was, you know, could rally even with that Catalan backdrop as well. Start of a 2-week euro strength window ahead of the big October. I mean, it's almost too easy, right? That's the only concern I have for it. It's almost too easy a trade. I mean, it's probably going to work out, but you know, there's things out there which can get the US dollar stronger. That inflation number can change the game completely if it's strong. And then the other thing which can change the game is if we get rumors out from the ECB that they're delaying again. Right, that's something that could easily happen. They've talked about it. You know, sources have talked about it already. And when would that happen? If the euro got stronger into the meeting, try to throw cold water on it. So you can't trust, you know, the big easy trade every now and again. You got to be skeptical and know, you know, what's the other side of the trade. Because when you get really, really comfortable with a trade, like I am right now with the long euro, that's when you get that's when it gets dangerous, right? That's when you can lose a lot of money. Right, the long euro against USD. Jesus. Now I'm even more scared. These are exactly some targets that I've given some clients of mine. You don't want the banks and everyone to report what you think is going to happen. It's it's not actually a good thing generally. For everyone to be on the same page is dangerous. Just quickly, in case we miss some macro stories. Looks like we haven't missed anything. Alright, so be careful today. We will we'll be back tomorrow to see what happens with this US dollar. It's at that critical point now that it's either going to push back or it's going to fold completely. What we do after that is you know, it becomes very easy to keep buying the euro if the dollar folds. If it pushes back though, it becomes a little bit more dangerous, the euro trade. But as long as the euro doesn't fall too far and starts to buy back up again, then we can get long the euro next week, depending on that inflation number on Friday. Other than that, if you want to trade something today and you're looking for something which has got some immunity to the FOMC minutes, it's euro yen has a little bit more immunity, and it's a way of getting long the euro with some potential upside that really plays into the stock market gains. Alright guys, best of luck. We'll be back tomorrow. We'll talk about the FOMC minutes, and from there we can discuss the CPI. It will still be a day away, but the CPI is probably the biggest event for this week.